Welcome to Morphic Labs, and today we are going to be discussing order flow and microstructure aggregation, more specifically 7.1 trade signing methods. But before we get into that, do me a favor, hit the subscribe button if you want to keep up with more content like this. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrids methods aggregation, implementation, and selection criteria. If you're interested, the links in the description. You just gotta sign up to be a free member and you have it all to yourself. Now, let's get into it. 7.1. Trade signing or classification determines whether a trade was buyer-initiated or seller-initiated, enabling order flow analysis and informed trading decisions. Classification methods are defined as tick rule, B sub t equals 1 if delta P sub t is greater than 0. Negative 1 if delta P sub t is less than 0. B sub t difference 1 if delta P sub t equals 0. Quote rule defined as 1 if P sub t is greater than or equal than ask sub t. Negative 1 if P sub t is less than or equal than B sub t. Then bid sub t. 0 otherwise. Lee-Reddy algorithm. 1 if P sub t is greater than mid sub t. Negative 1 if P sub t is less than mid sub t. Take rule if P sub t equals mid sub t, where mid sub t equals B sub t plus S sub t over 2. Emo. 1 if P sub t is greater than mid sub t. Negative 1 if P sub t is less than mid sub t. 0 if P sub t equals mid sub t. Now, when do you use this type of aggregation? Order flow analysis, informed trading detection, market making, spread optimization, VPIN calculation, price impact modeling. The advantages of this type of aggregation: enables order flow imbalance analysis. Simple tick rule requires only price data. Lee-Reddy widely accepted standard. Foundation for many microstructure metrics. Real-time computable. The disadvantages of this type of aggregation: tick rule accuracy is approximately 70 to 80%. Code-based methods require L2 data. Accuracy varies by market structure. Midpoint trades create ambiguity. Batch auctions complicate classification. Now let's get into the code. I'm going to be running this on my Bitcoin USD L2 data and the price data. Now, essentially, I'm going to run this on the first 50 entries, right? And I'm going to push it up incrementally. Now, when you look at the tick rule, you can see that it stayed at 1 and then dropped around the 5th index, and it stayed at -1 for much longer than it stayed at 1, right? And then it switches the dynamics. Now it's at 1, and then it switches them again. And pay attention to the duration of this, right? Look at the duration of -1, and you look at the duration of the next one, right? And then you look at the duration of the next -1, and you look at the duration of the next one. It's much shorter. But over here in the next one, you can see the duration between the 1 and the -1 is essentially the same, right? So the duration at which the market stays in certain dynamics essentially changes given the data coming in, right? When you look at the quote rule, it just stayed at 1. It didn't pick up on any dynamics because of its rule, right? And the Lee-Reddy algorithm just stayed at 1, 2. Emo just stayed at 1, 2. Now, what I'm going to do is I'm going to push this to 100 entries. That's plus 50 for each. And as you can see, the bottom 2, 3, 4 essentially just stayed at 1, right? Because the conditions were not met. But you look at the tick rule, because it has a more, I would say, if you look at the tick rule's dynamics, I would say it has a more flexible method of classification, so to speak, right? Because the delta of price is a much more dynamic variable than just this, right? Than just price itself. But let's look at this. As you can see, same thing, right? We have tick rule being at 1, drops to -1, stays at -1 for a while, goes back up to 1, stays at 1 for a very short time, drops back to -1, stays at -1 for much longer, and then goes back to 1, stays at 1 for a short period, drops to -1, stays at -1 for a short period, goes to 1 for a short period, goes back to -1, for a long period, and it just does this beautiful geometric dynamic. And you look at the quote rule, there isn't really much interest in geometry, it just stays at 1. Lee-Reddy algorithm stays at 1. Emo algorithm stays at 1. Now, I'm going to push this to 500. As you can see, the dynamics of the tick rule are much more richer, right? You look at the quote rule. The quote rule essentially was at 1 up until the, I'll say 150th index, and then it dropped to 0, and then it stayed at 0 up until the 500th index. And if you look at the quote rule definition, you will see that it becomes 0 otherwise, meaning that these two above conditions were not met, right? And that's why you see that it stays at 1 and then it just drops to 0 and just stays at 0. Lee-Reddy algorithm didn't really pick up on anything, stayed at 1. Emo didn't pick up on much, stayed at 1. Now I'm going to put this to 1,000 indexes. Which is the limit of my price data. As you can see, the tick rule much more richer. The quote rule essentially was at 1 up until the 150th index, and it just stayed at 0 up until the 1,000th. And you look at the Lee-Reddy algorithm, it stayed at 1 up until maybe the 510th index, and then it dropped to -1, and it stayed there up until the 1,000th index. And you look at the Emo, same thing with the Lee-Reddy algorithm, right? It stayed at 1, and then the condition was met, and then it dropped to -1, and then it stayed at -1 up until the 1,000th index. The tick rule, very dynamic, right? It's 1, -1, 1, -1, 1, -1, and the durations between these transitions essentially are non-uniform. But that's about it for today. If you're interested in more content like this, hit the subscribe button to keep up with it. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrid methods aggregation, implementation, and selection criteria. If you're interested, the links in the description. Just gotta sign up to be a free member and you'll have it all to yourself. And that's about it for today. I am out. Bye.